Good morning everyone. Today we will be discussing about securities markets organization and operation. So first, what is market? In security analysis, a market refers to the platform or environment where securities such as stocks, bonds, and other financial instruments are bought and sold. It provides liquidity, price discovery, and a mechanism for investors to trade assets. Next is the characteristic of a good market. A good market is essential for smooth and fair trade. It ensures that buyers and sellers can easily access price information, conduct transactions without major delay, and avoid excessive costs. If a market lacks these qualities, trading becomes inefficient, leading to uncertainty, higher costs, and price manipulation. One of the most important factors is liquidity, which means that assets can be bought or sold without significant price fluctuations. This price stability, known as price continuity, prevents extreme price jump that can make trading risky. Markets with good liquidity also have depth, meaning there are always enough buyers and sellers willing to trade, reducing the chances of sudden price swings. Another crucial factor is low transaction costs. If the fees are too high, people may hesitate to trade, making the market inefficient. Lastly, a good market quickly adjusts to new information, of course. If a company announces higher profit than expected, its stock price should rise immediately because demand increases also. This ability to reflect new information in prices ensures fairness for all market participants. Next is the decimal pricing. Before decimal pricing, stock in the Philippines were priced using fraction. For example, instead of seeing a stock price at 50.10, you might have been seeing it as 50.18. This made price comparison difficult and increased trading costs because of the bid-ask spread, or the difference between the lowest selling price and the highest buying price. With decimal pricing, stocks are now quoted in pesos and centavos, just like regular prices in stores. This made it easier for investors to read and compare stock prices. More importantly, it reduced the bid-ask spread, meaning investors now pay less when buying stocks and receiving more when selling them. Next is the organization of the securities market. The securities market is where financial assets like stocks and bonds are bought and sold. It is made up of two key markets. The first is the primary market. This is where new stocks or bonds are sold for the first time. Companies or governments sell securities to raise money for businesses or projects. A common way this happens is through an initial public offering or IPO, where a company sells stocks to the public for the first time. Next is the secondary market. This is where existing stocks or bonds are bought and sold between investors. The company or government that issued the securities is no longer involved in these transactions. Stocks exchange like the Philippine Stock Exchange or PSE are examples of secondary markets where investors buy and sell securities from each other. Next is the primary market. The primary market is where companies, government units, or municipalities sell new stock and bonds for the first time to raise money. Investors buy directly from the issuer, meaning the money goes straight to the company or government to fund their projects or business growth. Next is the U.S. government bonds are grouped into three types based on how long they last before they need to be repaid. First is the Treasury bills. These are short-term bonds that last 1 year or less. They don't pay interest but are sold at a discount and redeemed at full value. Next is the Treasury notes. These last between 2 and 10 years and pay interest every 6 months. Lastly is the Treasury bonds. These are long-term bonds that last more than 10 years and also pay interest every 6 months. All three are backed by U.S. government, making them low-risk investments. When a new municipal bond is issued, it can be sold in three ways. First is the competitive bid. Different buyers submit sealed bids and the issuer chooses the highest and best offer. Next is the negotiated sale. The issuer works directly with an underwriter who helps to set the price and sells the bond exclusively. Next is the private placement. The bonds are sold directly to one investor or small group, often large institution, instead of being offered to the public. Each method allows municipalities to raise funds while choosing the best way to sell their bonds.
So, next naman is the corporate bonds. So, dito, typically issued through a negotiated arrangement with an investment banking firm or banking company. And dito, sa corporate bonds, yung investment banker, they are working closely with the issuing company or issuing firm. And sila rin yung tumutulong to structure the bond offering and to facilitate its sale to investors. So, next is the corporate stock issues. So, dito, for corporations, new stock issues is nadi-divide siya into two groups, which is the season equity issues and initial public offerings. So, first is the season equity issues. So, dito sa season equity issues, meron ng existing na new shares, oh, meron na existing dito or meron na yung company dito is they are publicly traded issues additional shares of stock to raise capital. And dito yung company dito is meron na silang na-establish na history or trademark sa market, and the new shares are sold to the public or to the existing shareholders. While sa initial public offerings dito lang is first time dito mag-offer or makapagbenta ng to the public ng mga stock. And dito, from private to public ownership. And inaalaw din dito to raise capital from public investors for the first time. Next is, then dito sa corporate stock issues, yung isang example dito is the General Electric, which is a large and well known na firm that has had public stock trading in NYSE for longer than 50 years. So, next slide po. So, next nga po, so, initial public offering. So, yun nga po, dito, it involves a firm or company that's selling its common stock to the public for the first time. And it's a IPO, wala pang existing na public market for the stock, and the company has been closely held. Isang example dito is the IPO by Polaroid Lauren, which is a leading manufacturer and distributor of men's clothing. So, next is the introduction of Rule 415. So, dito sa introduction of Rule 415, which is introduced by the SEC or Security. So, dito, they allows yung mga large company or large firms to register the securities in advance and to sell them gradually over 2 years rather than all at once. And dito, this process is known as shelf registration, which is they give the companies a flexibility to issue securities when market conditions are favorable, and which is magre-reduce yun ng cost and mag-improve ng efficiency sa company. So, next slide po. So, next naman po is the private placements and Rule 144A. So, dito sa private placements and sa Rule 144A, instead of public sale, yung mga company or yung mga firms is they can issue securities through a private placement, wherein yung mga investment bankers, yun yung tumutulong to design the offering and to sell it to a select group of institutional investor. And yung SEC din po yung nag-introduce ng Rule 144A to make private placements more accessible and attractive sa mga investor, especially sa mga large institutional investor. And dito, this rule is they allow US and non-US companies to sell securities privately without having to meet the same extensive disclosure requirements as public offerings. So, next naman is the secondary financial markets. So, dito naman, This is a place wherein yung mga investors is pwede silang mag-buy and sell ng financial assets such as stocks or bonds from other investors. And also, yung secondary markets is they are also known as stock exchange. So isa sa popular na isa sa example na popular secondary markets is the National Stock Exchange and the New York Stock Exchange. So next slide po.
Next is the importance of secondary markets. So, secondary markets are important kasi they allow people to buy and sell stocks, bonds, and iba pang investment after they were first sold sa primary market. So, this make it easier sa mga investors to turn their investment into cash whether they need to. So, yung market na to is tinutulungan din ito yung pag-set ng real value sa isang investment. So, yung price change is nagbe-base siya sa kung how many people want to buy or sell them, helping everyone see what the investment is truly worth.
So next slide is the secondary bond markets. So dito, the secondary market for bonds is distinguishes among those issued by the federal government, municipalities, or corporations. So these are secondary bond markets. Municipal bonds issued by state and local governments, which is primarily traded by banks and investment firms, which act as a major market makers.
Next is the financial futures. Financial futures help investors manage risk by locking in prices today for future transactions. Farmers, traders, and businesses use this contract to protect against price changes. For example, if a rice trader in the Philippines expects rice price to rise in 3 months, they can enter a future contract to buy rice at today's price, avoiding potential future increases. Next is the secondary equity market. Unlike primary market, where companies sell new stocks, secondary markets allow investors to buy and sell shares from each other. These keep markets active and transparent. For example, the Philippine Stock Exchange or PSE is a secondary market where investors trade shares of Jollibee, Ayala Corporation, and SM Investment after their initial sale in the primary market. Next is the primary listing markets. A primary listing market is where companies first sell their shares to raise money. These exchanges have rules for companies that want to trade publicly. For example, in the Philippine Stock Exchange or PSE is the country's main stock exchange. Like the New York Stock Exchange or NYSE in the US, companies like Jollibee and SM Investment are listed here. Next is the regional stock exchange. A regional stock exchange is a smaller stock market that operates in a specific area or region of a country. Instead of covering the entire nation like a national exchange, these exchanges have less strict listing requirements, making it easier for smaller companies to trade their stocks. Next is the third market. What is the third market? The third market refers to trading of exchange-listed stock outside the exchange by dealers and brokers. This allows investment firms not part of major exchanges to trade listed stock. Imagine a broker who is not a member of the New York Stock Exchange but still wants to trade Coca-Cola stocks. Instead of going through the exchange, they trade directly with another dealer in the third market. In the Philippines, we do not have an official third market, but similar trading happens through over-the-counter trading, alternative trading platforms, and extended trading hours and off-hours trading.